Good morning, everyone. Well, the U.S. Congress agreed to fund the government through January 15th and raise the debt limit through February 7th. So the U.S. government shutdown is over. What I want to know is this the end of the war over the debt limit, or is this just a pause before the next battle in February when the government will hit up against the debt ceiling again? I really hope we've seen the last of this issue and can go back to talking about growth, tapering, and other normal economic topics. In that respect, the U.S. government shutdown may have dealt a blow to the dollar. Estimates are that U.S. fourth quarter growth has been dampened by anywhere from 0.3 to 0.6 percentage points. Consumer and business confidence is likely to decline, and that'll slow growth going forward. Because nobody knows if this fight will break out again in a few months. So companies are likely to remain wary of investing. Against that uncertain background, the Fed may delay tapering its quantitative easing until March of next year and keep interest rates low for longer than it might have otherwise. Meanwhile, growth elsewhere is recovering. Yesterday, we had auto sales in Europe rising at the fastest pace in 2 years. And, for example, recently we've seen the labor market in the UK improve faster than anyone had expected. So the policy divergence between the US and other parts of the world isn't as distinct as it was before. That's likely to slow the dollar's rise over the next few months compared to what it would have been otherwise. Today, the dollar was generally lower against both the G10 and most emerging market currencies. The major exception was the yen, as dollar-yen followed the Topix index higher, as it usually does. Now, while it's understandable that the high beta risk currencies, such as the Canadian dollar and the Swedish krona, gained, it's surprising to me that the dollar is lower against the Swiss franc as well. Dollar Swiss was the main beneficiary of the higher than expected ZEW survey earlier in the week, when a surge of optimism about global growth boosted the dollar, particularly against the Swiss franc. I'd expect to see the dollar regain some of its ground against the Swiss franc today, as confidence, and over the next few days, as confidence in the U.S. comes back. Now, the focus of attention today will be on UK retail sales for September. Retail sales have been one of the bright spots driving the UK economy recently, and this indicator is likely to be closely watched as a result. A rise is expected. That could be positive for the pound. In the U.S., weekly jobless claims are expected to fall, but so too is the Philadelphia Fed survey. The fall in the Philly Fed may be the bigger have a bigger effect, and that is likely to be dollar negative if people are paying attention to things like that anymore. Now, for more information on our view on currencies and our technical analysis, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.